The evolution of financial systems, old versus new. In this episode, Dr. Jemma Green is joined by Stefan Rust from Truflation to discuss current market dynamics, including Japan's carry trade and US recession fears to the evolving landscape of blockchain and AI. From the complexities of old financial systems to the promise of emerging technologies, there are lots of deep insights you don't want to miss. I'm your co-host Anthony Perl, and whether you're an investor or a startup looking for insights, it's time to get unblocked.
Stefan, welcome to the show.
Yeah, thank you for having me, and super excited to be on the stage with you again. And yeah, after our last podcast, which I thought was really good, and I'm really excited to be with you and share insights of what we're thinking and experiencing this on your podcast as well.
Super. Well, what's happening in the market right now from your perspective, and what's on your mind?
Oh my God. Yeah, lots happening in the market. I think in the long run, there's the Japan carry trade that's going on, $24 trillion in trade that needs to be unwound. And that's debt that's incurred in Japan yens at zero interest rates in the past that now all of a sudden is up at 0.25, right? From 0.1 to 0.25. You have to pay to borrow money. Oh my God. And all of a sudden that realization is kicked in. And ultimately the sell-off in US equities and US T-bills is happening in order to service the debt, in addition to the fact that the yen has experienced a lot of volatility, which means that it's becoming more expensive to buy back the yen in order to service the debt. So I need to sell even more. And so those are things that are happening on the carry trade side. You've got the whole election debate, right? Trump coming out really strong. Then we knew that anybody that's going to be an alternative Biden is going to grow in the polls. That's happened. Kamala is now way higher in the polls now. And so as a result, there's a bit of uncertainty. Is Trump going to win? No. So there's that level of uncertainty that's coming to the equation. We've got unemployment numbers that are implying that we're going to go into a recession. We had Powell come out, say no interest rate drops, and maybe even not interest rate drops in September. He's not sure. And so all of these things have compounded, resulting into what happened over last weekend, and we've had to suffer through this week. And all I want to say is that, in summary, it's an old system that was put in place over 100 years ago. A lot of investment, a lot of talent, and a lot of resources has gone and invested their, capital and their knowledge and their reputation on this old system. In parallel, we've been growing over the last 10 years or 15 years nearly, this new system leveraging blockchain, using technology on top of the internet with AI. So all of a sudden, you've got this new system emerging with a lot of new talent, diverse talent, knowledge base, capital coming in to help grow this with skin in the game in that new system. It's still tiny in contrast to the old system, but the old system has got so much baggage. It's so laden with bureaucracy, with paperwork, with compliance, with legal, that it's just not taken out old laws, but instead layered new laws on top of all the old laws. So you have all the old laws that apply to pre-electricity days, and on top of that, new laws that apply to modern technology. So you've got to cover all of that and span all of that. And so that just is being a huge impediment to the progress on the old system. On top of which, you have debt to the unsurmountable debt in the old system. And there's no indication of cleaning up the operations and cleaning up the P&L other than trying to drive more tax income. And tax income is not going to service that debt. It's got to come through growth, and it's got to come through streamlining the operations. But there is so much vested interest in the old system, they are not willing to make those changes. Or they're willing to make those changes, but they don't want to sacrifice their own realm of influence to make those changes. And so that's the real struggle over there. And then all the meanwhile, we're just innovating. We're bringing in new talent. We're growing. With a lot of hiccups, we're constantly rebalanced. So there's no bubble building in the crypto land because it's 24/7. It's always tradable. And when something blows up, it blows up big and it hits everybody, but never to the magnitude of 24 trillion, maybe to 100, 200 billion, to the extent of a Luna, a Celsius, a Three Arrows, right? You look at that magnitude, that's the size versus a Sumitomo Bank or a Bank of Japan or the carry trade alone, and the debt amongst the unrealized earnings at these banks around the world. And so I like the fact that this new system is constantly rebalancing. It lives in volatility and it trades 24/7.
I would like to respond to a few things that you said. The first was, what just happened over the weekend and this week? Just for the listeners, depending on when they're listening, could you tell everyone what actually happened in the past week in the markets?
Yeah, so unemployment numbers came out on Friday, and I think people were expecting them to be better. They were worse than was expected. And that sort of created a mindset of, recession's coming. There's the SAM report, which is a study, and that's what it told us. And then ultimately, people started realizing Japan increased interest rates and Jerome Powell, the US, did not, held interest rates steady. And so that then created another set of unwinding that created panic. So number one, US going into recession fears due to the SAM report and unemployment numbers being higher than expected. Number two, the carry trade, right? There is a realization that's kicked in. And people knew this, it just didn't know that this was really going to unwind right now. And that is that there's $24 trillion worth of loans taken out in Japan in yen. What people then do is convert that yen, get free money, convert it into US dollars, and buy T-bills. So I'm earning 5% interest in a T-bill, which is considered steady, guaranteed. I can borrow against that T-bill again. But more importantly, I'm earning 5%. So I'm borrowing at 0% and I'm earning 5%. So that's what happened to the magnitude of $24+ trillion. And so all of a sudden, yen goes up in price. So remember I talked about converting the yen to US dollar. And so now in order to get back that same yen amount, I need to buy more. I need more dollars to buy the same amount of yen. So then ultimately, am I making with that 5% sufficient return to make up for the fluctuation in currencies? And number two is, so that's really what's unwound, and that's really beginning to happen. In addition to which, all of a sudden, the money that I got for free over here is now 0.25%. So it's costing me a bit more, that loan that I have. So either I have to go repay that loan and service that loan. And so you've got those two things that compounded together resulted in this huge panic. And obviously crypto Twitter fed that panic. The crypto community picked up on that. And because it's 24/7 trading, we traded over the weekend. So crypto corrected much faster over the weekend when nobody else was trading. Why? Because it's a liquid asset. You cannot sell real estate right away. But what can you sell? I can sell Bitcoin on 24/7, and then I can get my yen and I can immediately do that. To unwind real estate, oh my God, bonds, I have to again wait approval. It's T+3 days. So you got this huge, long diatribe of process that has to take place. Compliance, what's this money for? You got questions you got to respond to. I mean, I'm exaggerating a little bit, but in the case of real estate, it's not liquid. You need to find a buyer. It's going to take months to unwind. Whereas crypto, bing, ding, sell quick, ding, Bitcoin, Ethereum, bang, go. I'm good. I'm serviced my debt.
Yeah. So what you've just said is you've got this realignment of interest rates in two countries, and the reshuffling of positions around that triggered a sell down in equity markets and also crypto markets, and from the panic of all of that. And the crypto market happened much harder and faster because it's a 24/7 liquid market.
Pretty much. I mean, there are other factors that came into the mix too, but that's the crux of it, right?
Headline. You also spoke about something I think much bigger, which is that you've got an economic system that is predicated on printing money and also legislation upon legislation that sits on top of each other that creates a lot of friction. And that system is creaking and something's got to give is what I'm hearing. You didn't say that, but that's kind of my sense from that. What do you think? I mean, is what's just happened this week and like just a market adjustment to just new interest rates, or is there something bigger afoot, or what would be the catalyst, do you think, or is what happening in crypto? Because in some respects, crypto is doing like many exciting things, but it's not the new system. It's not the mainstream system. It's still relatively small. And the comment you made about the scandals or issues happening in crypto and the magnitude of them being much small, that's really a function of crypto not being that big as traditional financial markets. It could be one day and could have issues like that potentially as well. Keen to get your thoughts on those 2 points.
Yeah, I mean, I think crypto adjusts, at least in the on-chain self-custody world, it adjusts itself a lot faster. And so you don't get the magnitude of corrections that you get in this bubble economy that, with central bankers, with, the conflict between fiscal policies and monetary policies, it creates that, right? Because from a fiscal standpoint, I want to make sure that the government gets reelected, right? And so they need to provide a level of satisfaction amongst the populace in order to get reelected. And so ultimately, that's one thing. And then there's the monetary policy, which is trying to help drive growth associated with the money supply. And so that conflict then generally creates this bubble around the economy that every 10 years, we just somehow seem to see a big blow up. We saw it in 2000s with the telecom bust. We saw it in 2009, 8 with the great financial crisis. We saw it in 2020 with the COVID crisis. So each 10 years, there's sort of, for whatever reason it might be, there's a big blow up. And I just see that they get bigger and bigger, because in order to correct a blow up like that, you come up with, we're going to do 500 billion, right? Okay. The next one is, we have to have 1 trillion, right? Because otherwise it doesn't sound credible and it's not serious enough, right? And then, in order to fix this one, what have they done in this time round? It's like now Yellen and the Treasury came out with a policy that we're going to put $50 billion into the market every month to buy back treasuries. So it's now, I've got consistent out of the budget of the government. And who funds the budget of the government? The Fed. So the Fed has to feed money to the government, who are going to ask for budget extensions each time, because they're going to put $50 billion into the market to buy back T-bills. And they're going to buy it from the banks and say, don't sell it in the market. We'll do an OTC deal. And so they're going to print more money. They're going to buy back these T-bills. And then ultimately, the banks then have the money again and the cash in case they need to prop up something or give loans out and support the economy.
Well, it sounds like you're saying this is a cyclical thing that happens like every sort of 10 years, 7 to 10 years or so, catalyzed by different things. But fundamentally, it's this sort of burgeoning overweight system that, is heaped with more and more opprobrium and conflicts basically between like politics, the administration and the monetary policy.
Yeah, that's sort of what I think. I think it's going to change even more, right? We're in a really exciting time where we're building new systems for governance. We're putting governance into smart contracts to a certain extent, as much as we possibly can, managed by a decentralized network that is going to maintain that governance and have a ledger that's open for everybody to prove that the governance is held and according to what is documented in smart contracts. We've got a energy revolution taking place right now with nuclear power, with fusion technology that's coming. So energy drives growth, and that there's a direct correlation with GDP growth and energy supply. And then ultimately AI, we're going to have an unlimited workforce that's going to come into the market, a new population growth. And population, I put in inverted brackets here, because they will be new people that are going to be helping grow. And we can just launch one every second. They're all software generated. And if we need a robot, we'll just put that software in a robot, and they'll be learning from each other, because they'll all have open source code repositories that I can take the learning from that previous version, put that into my robot, and then this robot can learn with in my personal interactions with it and the learnings of everybody else out there. So ultimately, there's going to be such a phenomenal change coming. I think people are scared of that change.
I was just interested, Stefan, in wedged in between the new and the old system is also the increase in the response times, particularly around media and broadening that to social media and things, which the new system is responding to at a much quicker space, but being able to filter what's real and what's not real, and how that actually can cause explosions in the market. I'm interested that you see that happening even more in the newer system.
Yeah, I mean, that's definitely a very valid point, right? And you can see we don't read anymore. We don't study. We don't do research. We just read the headline. And if the headline says one thing and it catches momentum on that headline, whether it's accurate or not, doesn't matter. The general consensus is built around that headline, which is definitely a big problem. The only answer, I think, today you have footnotes in terms of, is this article accurate? So Twitter's trying to have comments in there that actually says this article is not accurate. The people can respond, can add accuracy to it. Ultimately, we need some sort of cryptology, crypto related authentication of that this has been verified. It is from this user and it's attributable to that specific user. So that ultimately, very much like in the past, when you would subscribe to the Wall Street Journal was your newspaper of choice. Whether you were subscribed to the Guardian, that was your filter of news. And so you heard everything that the editorial team at the Guardian told you was true. And you believed that. And you did the same with Wall Street Journal. You never questioned it because it was from a journalist. And so how do we identify who these journalists are on social media? We follow specific individuals and we believe in their voice, and they become ultimately the source of truth. And so how do we verify that those users are actually those users, and the posts that they are putting out there are actually verifiably from those individuals? And I think that's something that crypto is really good at. And that's what we're working on at Truflation, not from an individual perspective, but from big data providers and whitelisted data providers on our network. But that will come.
Because I imagine the danger is that with 24/7 trading, that you might not wait for those for that verification, and so that you can have things happening in an instant because of something that's not real.
Yeah, but day traders love that. Day traders love volatility, right? But I think, and it's really difficult. Everybody thinks it's easy to be a day trader. It's not easy. It's really hard to make money with all of this volatility. And so my view is just stay macro, buy what you really believe in, what you see based on your strategy, your philosophies, and back those. And just hold on to them and buy it for the long term, right? Invest in long-term goals and take a more sustained approach to things so that you can sleep at night. And I think that's always ultimately the measure. What is your level of sleepability, right? So if you're so worried about your positions and you cannot sleep, then maybe you shouldn't be having those positions. And I think that's the approach. I mean, it's really simple, But in the end, I think a lot of things come down to very simple elements. And largely we're all emotional animals, right? And we're not AI bots. We are humans that have emotions. And I think we are largely driven by emotions.
Yeah, I'm interested as well in the prediction side of things, right? So you talk about what's been happening, but predicting what is going to happen and whether that looks different in the new and the old system as well.
Yeah, a lot of people have opinions and predictions, and ultimately what we try to do is bundle as many opinions as we possibly can to then identify what is the general consensus around a prediction. And then there are black swan events that nobody can predict, right? But I think if we can aggregate and pool a large enough of a consensus together from a big enough of a pool of data, and prediction markets have been trying to do that, and people are putting money into a prediction. And then all of a sudden that gives it a level higher of credibility. So if you put $100 on the table that you believe this is going to be the outcome, wow, you're more convinced that's going to happen. And so maybe I should listen to your opinion, why you think that's going to happen. And so those are things that I think are going to be the new source of news, is actually prediction markets, because they're actually trying to go into the future. And I don't think we can go, some prediction markets, you can go 1 month out, right? And that's already, wow, if you can predict 1 month out, that's pretty good. If you can predict 6 months out, 12 months out, that gets really hard to predict, because the black swan possibilities over a sustained longer period of time are far greater. And that's just my view. But I really like prediction markets. We've been working with a lot of these prediction markets, Polymarket, Predicted, Kalshi, some more licensed, some more unlicensed, some more crypto, some more traditional. But if you blend all of those together and try to sort of get a feel for where markets are going, really interesting. And then ultimately that data fed into an AI engine with other historical data is just going to, funnel all sorts of different scenarios, and it's going to give a lot of content, because people could talk about all these different permutations and different scenarios. Yeah, so it's going to get interesting, and more important for us to be able to filter information and get to signals a lot faster amongst the noise, and the noise is only going to grow.
How do you filter information at Truflation, Stefan? And maybe you could also just explain for our listeners what Truflation is.
Yeah, so Truflation we started off 3 years ago when we were told by the government that inflation is only transitory. And we looked at the system of calculating inflation, and we saw it was 100 years old. And so we wanted to innovate and reinvigorate how inflation is calculated and have an independent source of truth for inflation. And so we went out and built out Truflation and the true CPI. That was our genesis. That was what we focused on. And the true CPI is high frequency, real time inflation, consumer pricing inflation data. We track it from 18 million items that we track. We have 3 price feeds per item that we track. And we have nearly now about 100 different sources that we pull data from. All of the data sources are whitelisted. Each item is how we verify price changes is by having 3 price feeds per item. Why? Because then we can see a certain level of consistency amongst the data. If there's a big outlier from one of the 3 providers, then ultimately that raises flags in the system, so that then we actually go and validate, is that an accurate price point? If so, how does that change the price mediation? If not, that data provider then gets blacklisted, and so then not used anymore, and then we go and source another data provider. But that's how we sort of do the verification. And every price feed on the Truflation network is, number one, authenticated through that model that I just mentioned. It's verified across a network of node operators with a consensus algorithm. And then ultimately it's traceable back to that source. So those are things that we've built out on the Truflation Stream Network. And by the way, all of that data is available for everybody.
Amazing. So you can just go to the Truflation website and see that data?
Yeah, you can see all the data. And then if we haven't yet opened the GitHub repos, but the ledgers will be public. We'll have our own Explorer. You can go on to some 20 different blockchains every single day, and you can see the updates on the data sets every day.
And what is the inflation rate according to Truflation compared to the government published rates?
1.54 right now on Truflation, and the government number is 3%. The interesting thing that's happening next week, so we're going into prediction now. Next week, we will see the BLS, which is the Bureau of Labor and Statistics in the US, which reports inflation numbers at the national level and is the leading indicator of what people and the financial markets listen to. And currently, today still. And we are predicting that they're going to break the 3% barrier. So the number is going to come down below into the 2% range, which Jerome Powell has always been wanting. And I think the events over this last week are only going to justify the interest rate hikes and retaining it high to bring down costs. The unemployment rates are rising. Companies are missing their earnings. Stock markets are down. There's a bit of a panic situation in the market. Everybody's worried about recession. So ultimately, I've achieved the goal of bringing inflation down to the 2% number at the cost of employment, which has happened. So we'll see what the number is. And that number will have a significant impact on the forecast when the FOMC meeting comes together again and meets and discusses and will share where the interest rate numbers will land.
Stefan, governments often talk about what's manageable inflation and they base it on their numbers. So what's manageable inflation based on your system?
So I don't think 2% is a realistic inflation number these days. I think we need to move more into a normal being 3% up to 5%, depending on the market. I think that's a realistic number to have out there. And I think what the market is expecting is consistency rather than fluctuation all the time. And if it's 3% consistently, if it's 5% consistently, the market will accept that and that will become the norm. I don't think this arbitrary 2% number makes any sense whatsoever, especially taking into account we're going through a really big transition right now in the world, right? We talked about all the new technologies coming online. We talked about the new energy requirements that all these technologies are going to be needing, the cost of investment into all these new energy environments. Where's that money going to come from? What's the ROI associated with that investment? Number one. Number two, onshoring, right? We're moving away from a global supply chain into I want more local price, right? So if I build more things local, I lose benefits of economy of scale. I lose all the benefits of all the costs associated with the economies of scale. So prices of unit prices are going to go up as a result out of it. And so I think that inflation at a consistent 3 to 5% in the future, at least for the next foreseeable time until AI kicks in, maybe 2030, we'll have a whole new calculation on what is inflation at all, right? We'll have abundant income because we've got robots working for us everywhere, right? And so what is the purpose of a human going to be in an AI world? We need a purpose in life, right? What is that purpose when everything is automated? We have thousands and millions of agents working for us on all the different aspects in our life.
Well, we get to talk about it on podcast. We get to talk about it on podcasts, don't we? That's our role.
That's true. We'll just talk about them and explain. But then we'll have an AI, I'll be replaced by some AI. It won't be me here. It'll be some fictitious, virtual hologram of Stefan here and Jemma and Anthony. And then we'll be,
We'll be watching ourselves.
Yeah, we'll be watching ourselves, or our thoughts will be downloaded into some other AI, Neuralink that will be feeding up into our projected selves. I mean, we've seen all of this in science fiction movies, right? And but if you look at the technology and you look at the innovation taking place right now, and you look at the investments going into all of these innovations, it's in the realm of our lifetime that we will experience a lot of what we saw in these sci-fi movies.
But do you think it's going to be a dystopian world or a brave new world?
Brave new world. I mean, I have to. I'm an entrepreneur, so I'm going to be positive. And I think the importance of open sourcing software is going to be critical in order to make sure it's a brave new world, because you want everybody to have access to the same resources. Because as soon as it's open source and everybody has access to the same type of resources, it's a level playing field. And then everybody is armed equally. And so there is no one power that dominates and everybody wants to attack that one power and then can exert its domination onto everybody else, and everybody else feels underwhelmed. And then you have this dystopian future where it's, like we see in all these movies. I was just watching, I couldn't watch it anymore, but I started watching this new Rebel Moon on Netflix on the weekend. And I couldn't watch it. It was just like too, it's ultimate dystopia, right? So the big overarching brother and the young rebel, and of course the rebel wins. And so I think, as long as you've created a level playing field, then everybody feels equal and the opportunity is available for anybody to participate. And I really think that the evolution of network states are going to grow more and more, where you're in a given network and your community, that's your tribe. And your tribe is going to be spread around the world, and they're going to be closer to you in terms of emotional attachment, in terms of relationships, in terms of being able to relate around core philosophies and culture and sciences, etc., much more so than your physical neighborhood. And so as that sort of starts to transition, we want to be able to live where we want to share what we want to share, and we want to be able to access the same type of tools where no matter where we are, and that will bring about a more equal footing on the world.
That's all for this episode of Unblocked. Please check out the show notes for information on Power Ledger and other contact information. We welcome your comments and feedback, and please hit subscribe wherever you are listening. This podcast was produced by Podcasts Done For You. We look forward to your company next time on Unblocked.